Happy Monday, everyone. I know it's been a couple of weeks since the last market update. Life happens, but we are back on track with your weekly mortgage and market updates just in time for a huge week ahead. Oh, and before we dive in, big congrats to Eagles fans on that Super Bowl win yesterday. One day, I hope my Bears will get their turn, but I don't know how long I'll be having to wait for that. All right, let's talk about mortgage rates. We'll talk about CPI. We'll dive into Powell's testimony and even talk about gold potentially impacting mortgage rates. So some good news. Mortgage rates on a 30-year fixed loan have eased for the third straight week. It's not a massive drop, but hey, we'll take any relief we can get, right? Especially with spring home buying season ramping up. If you're in the market, this is the time to pay attention because things are starting to shift. But why is this happening? Well, this is where things get interesting. Big news from Washington. Scott Turner is now the Secretary of Housing and Urban Development. If his name sounds familiar, well, it's because he played in the NFL for almost a decade before getting into politics. Now he's stepping into a department that, in his words, is failing at its most basic mission. It's a bold statement. He's called out record homelessness and a lack of affordable housing, but the real question is, what is he actually going to do about it? Right now, we don't have specifics, but we'll be watching closely to see how his leadership impacts the housing market. Meanwhile, homebuyer sentiment has improved slightly, reversing December's dip. More people are expecting home values to rise, but here's the kicker. Fewer people expect mortgage rates to drop. That optimism that we saw late last year, it's fading a little bit. And home prices, they're still climbing. The median price for a single-family home is now $410,000. That's almost a 50% increase from just 5 years ago. If you're in certain markets, you now need at least $100,000 in income to qualify for a mortgage with 10% down for a down payment. So while rates are slightly better, affordability is still a challenge, especially for renters that are trying to break into the home buying market. All right, here's where things get a little bit spicy. This week, we've got the Fed chair, Jerome Powell. He's testifying for 2 days. We also have a CPI report, and we have a major Treasury auction that could shake mortgage rates up. Now, the CPI, which is the Consumer Price Index, is what everyone's watching because it's going to tell us if inflation is cooling off or if it's heating up again. Right now, forecasts are calling for a 2.9% inflation rate, maybe even a slight dip to 2.85%. Not super exciting, but it could be enough to spark a rally in the bond market. And if bonds rally, mortgage rates could improve further. But here's the wild card. Powell knows the CPI number before he speaks, so we'll be listening closely to see if he gives any clues before the official release later this week. And then there's the 10-year Treasury yield. If we get a solid auction, that could be great for mortgage rates. But if demand is weak, rates might be ticking back up a little bit. Now let's talk about something that's totally unexpected, gold. There's been some buzz about a potential strategy involving repricing gold to help the US government manage its debt. Stay with me here. Back in 1973, the Treasury priced gold at $42 an ounce, but today, gold's sitting at $2,900 per ounce. If they want to reprice gold to market value, the US Treasury could suddenly have an $800 to $900 billion cash infusion, which means they wouldn't have to issue as much new debt. Less Treasury issuance equals lower yields equals better mortgage rates. Now, will this actually happen? Who knows? There's some pushback because it blurs the line between the Fed and the Treasury, but it's an interesting concept that could have a big impact on rates. So let's talk about what to watch for this week. This is what you need to keep an eye on. Tuesday and Wednesday, we got Jerome Powell's testimony. We were going to listen for clues about inflation and future rate cuts. On Wednesday, the CPI report. If it's lower than expected, we could see some mortgage rates drops from it. Wednesday and Thursday, the 10-year and the 30-year Treasury auctions. If demand is strong, rates should improve. And on Friday, we've got our retail sales report because consumer spending plays into inflation. Look, this week is pivotal for mortgage rates. If CPI comes in lower and Powell hints at rate cuts, we could see another nice dip in rates. But if inflation stays sticky, we could go the other way. Bottom line, if you're house hunting, stay alert. If rates drop, you may want to lock in quickly. I'll be back with another update as soon as we have more info. Make sure you're subscribed so you don't miss it. Oh, and again, congrats Eagle fans. But mark my words, one day my Bears will bring it home. See you next week.